Okay, welcome everybody. It's Mag 7 night with the boys, which is an interesting time to have this because IWM is taking off, but we decided to get together and figure out what is going on in this market. So, of course, we have Scott Redler from the Alpha Team VTF. We have David Prince from the Inner Circle VTF, and making his first appearance is Derrick Oldensmith from the Pro Desk VTF. So we have to get all the disclosures, all the legal stuff out of the way so our wonderful compliance department will be happy with us. They won't call me up tomorrow morning and yell at me. So how is everybody doing out there? Derrick, first, how are you today?
I'm doing great. I'm loving this market recently.
Okay, we are going to get into all that. So Scott, how about you? How are you doing?
A little tired at a golf outing yesterday, a little charity outing. I was out to about 11 o'clock at night, and then I was up before I drove to the office. But all in all, the market action makes it a little bit easier. But you know, it's always interesting. So we'll answer a few questions after this.
Okay, David, how are you doing?
I'm like Derrick, very pleased, very happy, very grateful. It's been a beautiful market.
Okay, great to hear. Everybody in the chat, so we're crossing about 500 people right now. We expect to get up to 6,000 or 7,000, but let us know where you are watching from. Are you in New York, New Jersey, or are you overseas? Let us know where you are from. We want to make sure this is interactive. We want to have a little fun, so let us know where you are from. So help spread the word, like, comment, subscribe, and share. Of course, our good friend Itz is in the house. Itz always represents. We have somebody in Timbuktu. Wonderful. Glad to see you guys. So today's program, so we're going to do our fun game of two truths and a lie. We're going to talk about Mag 7, IWM, obviously the hot topic. That's going to come into this. Favorite Mag 7 names, least favorite, and everyone's going to share their number one idea right now. So check the video description down below for links to everyone's services. And if you don't know, the Mag 7 are the mega cap tech leaders: Nvidia, Meta, Tesla, Amazon, Alphabet, Microsoft, and Apple. So we're going to start with two truths and a lie, and everybody on this call, they are going to compete. Sami Abu-Saad was the champion last time, and we want everybody in the audience to participate too. So I'm going to make three statements. One of them is a lie. So try to guess the lie. So I'm going to make three statements. So number one, Meta is the number 2 Mag 7 name in 2024. Tesla is the number 1 Mag 7 name in July. Third one is Google is the worst Mag 7 name over the last 5 years. So everybody type in the chat, which one do you think is the lie? And of course, Scott, Derrick, and David, what is the lie?
Number one. Number one's a lie.
Scott, David?
I think number 2 is definitely a truth. I think Tesla definitely had the best gains in July. I could see, I also could see Google over the last 5 years, but I'm just saying safe. I know number 2 is a truth. I'm not going with the lie.
One's a lie. I'm going with one's a lie.
Oh, okay, Scott, which do you pick? Scott, which is the lie?
Oh, I said number 2 is the truth.
He's being Swiss. He's refusing to give you the lie. He
I'll go with you two, so
a million points in July.
All right, Meta's the lie too. I'll go with my smart buddies who know they have conviction. Whenever Dave Prince and Derrick have conviction, I don't even have to think about it. I'll just go with them. One's the lie.
Oh, okay, okay, you guys are all wrong. Amazon is the worst name over the last 5 years.
I knew it. Right when Redler said that.
Yeah, me too.
Rick Friedman in the chat is the champion. So Rick, you win. You don't get a prize, but you are the winner. So very quickly, so guys, Mag 7 stocks have been huge the last couple of years. Have been leading the market. Obviously, everybody knows about Nvidia. So we've seen this big trend in July. All of a sudden, IWM taking over. So Derrick, I'm going to throw the first question to you. How would you describe the environment out there for big cap tech relative to IWM?
Yeah, so this market's been great. I mean, this is the move that I really started looking for coming into July. As we know, a lot of new money rotates into the market in the beginning of July every year. First 2 weeks of July tend to be the strongest period of time for the year historically. And it just made sense because the outperformance on the Qs compared to the IWM had become so incredibly stretched that I thought it was just a matter of time before a catalyst hit that triggered this exact move that we're seeing in front of us. So the degree of the move is not surprising at all. The speed of the move after today, I mean, IWM up another 3.5% today, is starting to become a little bit impressive. I'm looking for this rotation to continue, not in a straight vertical line like it's been the last 4 days. We probably need some healing, some rest to pull back some digestion in the IWM, but there's still a big performance difference that I think the IWM could play some further catch up on. And the big thing is that people need to understand, I think, is a market structure situation with the S&P. The gamma, the positive gamma in the market is so huge right now that it's creating this rotational effect. For a while, when the Qs were going and they were basically just being led by 3 stocks, the market cap of those stocks is so big that by definition, the rest of the market couldn't go with the S&P gamma being at historical all-time highs. But now, if those Mag 7 stocks actually take a rest or, God forbid, pull back, being that this earnings season that we're coming into, the expectations for those companies is just massive. And I think that you're going to continue to see this IWM outperformance. I like value names. I like energy stocks. I like the worst charts that are out there right now. These beaten up growth companies that are down 50% on the year, but have created nice bases that they're breaking out of in this move. I don't think you can chase 225 in the IWM right now after this 4-day move, but look for the pullback, look for the bull flag or the pivot low to, potentially re-enter.
Okay, Scott. So, Scott, how are you viewing the action out there? I guess specifically with these big cap tech names.
First, let's go back to the IWM because I feel like, I'm on social media also. I feel like everyone on Twitter should be retired because everyone just caught 20 points in the IWM. Everyone was in a 201 and held it to today or maybe even into tomorrow, which I think if you're upset with the way you handled it, don't, because I think everyone's full of crap, to be honest. I know me, I feel like I did a decent job with this. I bought options and I was in at 201. And if you look, just might go to the chart reel here at 214.95. That was 2 days ago right here. I feel like most traders probably caught this move. And to me, I was kind of excited. I'm a professional. I've been doing this a long time. I caught that move. And then I feel like this day, which was yesterday, was the day that probably if you were long and you sold a lot of it, you got a little upset. Oh, wow, how many IWM calls did I have where I was in it? Some people probably started shorting this day thinking that it was a topping tail and are probably, I would say 25% of Twitter is probably short the IWMs right now and not long anymore, but making it like they all got rich long the IWM. For me, I like to try and talk tactics like DP and Derrick. And at this point, let's not make like we're on Fox Business or CNBC and talk about we're going to buy a pullback on the IWM. The outperformance can continue. It's like, no. Are you caught in a pain trade? And what happens if it's up another 5-6 points tomorrow? Are you still long? And if you are, maybe somebody hit you over the head because it's hard to be long. You probably fell asleep for 3 days. You had to take some off. And how do you handle the trade, massaging and moving forward? I know for me, today I started getting short the IWM. And I'll admit it, my average cost, it's a 224.86. I'm probably short from 223. But I didn't start at 215. And I didn't start, at 218. I didn't start. I'm like, my average cost is 223. And if we're up again tomorrow, I'll trade around it. If we go up another day like today, you're going to see a pain trade that's going to knock the teeth out of traders, I would think. And as far as, the mega cap tech trade, I just think, it needs time to rebuild. It's not where the focus is. We have 2 weeks to earning time. If you're looking to take any of these names into earnings, 50 points or more off the highs is the time to buy some options, and then so this way you can be involved for earnings if you think earnings are going to be good.
Okay. So David, we were talking with JR about a month ago, I think, and you were very bullish on IWM. And how do you feel about it up here? And I guess versus big cap tech going into earnings.
Sure. So first off, I want to say I think Scott's right? I mean, we all have people we mentor and we're around every day. I can't tell you how many people I literally made on Inner Circle. I did a roll call. I said, who's listening to me and staying long IWM because of what Scott said, right? Like everyone kept thinking this move can't go, it can't go, it can't go. And I made everyone raise their hand. only because I'm not a big fan of the market, and my alpha has been coming from size on specific catch-up plays, and IWM was the best one I had left. So I want to make it clear, I think a lot of people thought, oh my God, this won't last. Oh my God, it's 75 relative strength. It's time to short. Oh my God, none of these companies earn money. Oh my God, this shouldn't be happening. It's too easy to buy Nvidia. There were so many oh my gods. I think Scott has it right. And I bet you there are a lot of people who started short. I want to make something clear, though, that worked for me. We are in a market where there's so much outperformance, right, from just a few names, that if you go back on your film and see what we talked about, I said when IWM goes, Michael, and I'm curious if you remember this, said it's not going to be slow and no one's going to catch it, and it's going to all happen in a matter of days or weeks, just like October, November, December of 23. Do you remember when we chatted on that?
Yeah.
Okay. So we are literally doing the same thing. We haven't even had as a percentage quite the same move. We're getting it. Now, I, like these guys, would not go out and buy it out here. But because of the size of the move, and I want to go over a few things, because the IWM is minuscule. A lot of people don't realize it's like $60 billion market cap. Think about that. Think about Nvidia, right? Think about Amazon. Think about these $1 trillion market caps. We're talking about 65 billion. By the way, the three of us together could move a $65 billion market cap. I'm joking, but you get the idea. So I think part of what happened here is people forget how small cap became and thus misjudge the size of the move. I think we're not on Fox, like Scott said, so I'm not going to be like cute and be like, I'm buying a pullback. But I will say, I don't think this move is done. I hope there's some volatility. I hope there's maybe a hot number to cause it. Maybe it's poor earnings. Maybe it's a political event. And whatever that event is, we'll go back to the charts, which Scott is an expert in, and probably use some pivots like a 218 or a 215. I have to look on IWM to start adding risk. I can tell you I have been long the whole time.
Can I ask a question?
Yeah, sure.
Just for all of us. So at this point, because we always talk tier systems, if you, which you were long, I know for a fact, 'cause I heard you also, IWM's below 205, here 224, how much left do you have of the trade that you
20,
put on?
Not a trailer, but 20% and no stock. So fair question, no stock, only exposure and options.
So which strike would you have?
So so first it was 205. They went so deep in the money that yesterday at 218, I went to 220. Those got absurd today. And
you rolled them up, which is good.
To 230.
You're in the 230s now?
Yeah, and I did August, though. So I bought myself time. So if we do have a pullback, they're not a zero. I anticipate a pullback, and I'm rooting for a pullback. And I went with options because I, like you, think I'll actually be shorting the stock tomorrow. I'm running a fund. There's nothing wrong with being able to short the equity and staying long the calls, because I've learned every time I try and catch a top, I miss it. And we keep getting these alpha trades. May I mention Tesla? That I never dreamed I'd see 270, maybe 240, 250. So I learned from Tesla, which I was in, but sold too early, and then went to AMD, which I was in, thank God didn't sell too early. They're kind of, I wanted to ask you guys this, and I'll shut up, but I want to monopolize. I feel like it's the same trade in a different vehicle over and over, and we have to be cognizant these catch-up plays could be fast and furious, because AMD wasn't quite Tesla-like, but it was big. And now IWM's doing it. So we got to look for valuable vehicles that have yet to play catch up.
Yeah. To answer Scott's question that he just threw out there, I probably still have 60 to 70% of my long exposure that's related to the IWM.
In the IWM?
It's not the IWM specifically. It's stocks that are correlated to the IWM.
But I have that too. Okay.
That's impressive.
So I've got
I'll say that's impressive because we're
26 long positions on. But today I started shorting the IWM to hedge myself out for that, I think, inevitable technical pullback that has to come after such a fast move so quick. But I can continue to add on to that as I decrease the exposure that I still have, which is still relatively heavy to the IWM, if we get a day 5 tomorrow, which if you look back to 1979, there are a bunch of other periods where the IWM has given 1% plus moves in a row. There's about 6 where it's done it 5 times, and there are 2 occasions in which the IWM has gone up 6 days in a row, more than 1%. It's not impossible to see a day 5, day 6, but at the same time, the stretching here is getting so big that it makes sense to start taking some off the table, or in my case, I'm still pretty heavy long, but building into the IWM for a shorter term swing trade pullback at the same time.
And I just want to say underneath is different to me. Like my baby immunome, which I know Scott's been in, look at the chart. I'm sure if you punch it up, you'll love it. It closed above the 200-day for the first time in several weeks today. And it's not overbought. And it's probably going in a straight shot to 17. So there's stuff underneath that I'm not out of. But then my other small cap baby, Zeta, run by a dear buddy of mine, David Steinberg, that just ran in a straight line from 15 to 20. So I got flat that. So the point is, yeah, I still have exposure underneath, right? But I think we're talking IWM. It's late in the game to first buy it. I wouldn't be buying without a pullback, and I'm much smaller. But underneath is different.
Okay,
Mike, I think one more thing, and then we'll move on.
Sure.
Because again, this is a trading show. People who watch us want to trade and want to learn how to make money. So 2 awesome things that both these guys went over is, one, DP talked about how he was buying the 205 calls, and then it went 10 points. He took that off the table because there was a lot of equity there, then rolled it up to maybe a 215, a 220, and then a 230, because that's what you do when you're trading a move. You want to stay with it, but you keep taking higher strikes for less premium. So this way you're not at risk if you get a pullback. So that's what, when people are like, I'm rolling up options, that means he made money 4 different times and had less risk at each moment. And then what Derrick is saying is he's long, I don't know, he's at 20 plus positions in the small caps, but now that the IWM is all overbought, he doesn't mind. He doesn't want to get rid of his positions, but he's shorting the ETF IWM that correlates to it to maybe make some cute cash flow. So if the IWM comes down, he'll make money short the IWM, and then he could buy a dip in his key names. So these are ways that traders make money, not just talking about on TV. You know, I'm casually optimistic or cautiously optimistic, waiting for a pullback. This is what you have to learn how to do if you're going to be trading for 6 months, 2 years, 5 years, 10 years. And it takes time. And these guys are the most sophisticated out there.
Okay. All right. I think I want to build on something David said about these sort of things that just end up running away. So we've been hearing that Mag 7 too far, too fast for over a year now. And they've just, at the end of 2023, a lot of people are saying, okay, they're done now. They can't go more. But is there a chance we could say, and I'll throw this question out to everybody, could we see IWM at 275 or 300 in the next year? As part of this same theme of things running further than anybody thinks.
Yeah. Sure.
Well, I'll just say, I just put the chart up real quickly. This is the weekly chart of the IWM. We just showed the daily, so let's real quickly just go there. So in 2021, November 8th, the IWM was at 244. So why can't it get to at least 244? And right now, it just got into what a lot of our friends out there talk about, like
supply zone.
The supply zone. So that's why I felt comfortable shorting it to here, kind of get to 232 first. That would hurt. But right here, this is where it spent most of 2021 before breaking down. So 224 is the top of that. So, I can't just throw out a number like people like 275 or 300 in the IWM. I'll say, let's go with points of reference. Right now, we just got to 225. The next spot's 232. The next spot above that is 244. So every time one of these ETFs or sectors get to new points of reference, you kind of look at the composure and how it got there and how it acts before thinking about the next potential spot. So these would be the 3 spots. 219 was a spot, but it didn't last too long. So now you have 225, 232, 244. So that's how I would, basically break down the IWM moving forward if you're trying to play verse spots and stay in move.
Scott, when people are like, oh, what's your target at the end of the year? I'm like, what the hell? How do I know what happens? What if earnings are disastrous? What if subprime blows up? Let's worry about the next month or 2 and targets Scott's talking about, because 6 months from now, we might actually have found out that all these, powerful rate shocks have finally hit us. Even though they're lowering rates, maybe the economy's slowing down. So I'm like Scott. I'm like, I see 232 and I saw 240, but I'm not as good with charts as Scott, so I'm not exact. Right? And I'm worried about 232 and 240. I worry about 275 down the road. By the way, quick thing. It's still only up 12% versus Q's up, I know the dog, versus Q's up 25%. So it's like nothing as a percentage for the year. It's not like it's doing unbelievable.
Yeah, but also 100% agree with Scott. Could the IWM go up another $50 by whatever period of time you just said? Sure. Anything. The one thing I've learned in my time of trading is literally anything can and will happen if you've been in this game for long enough. But we got to take it one step at a time here. Let's see what the market looks like at the next resistance levels. Let's see how the current degree of extension that we now have in the IWM after this 4-day move satisfies itself. It could become even further stretched, even further extended, but it's basically a law of nature that you can't just go straight vertical forever. So at some point there will be a price correction in this move. And then we'll really be able to see, I think, if it has legs. Because like David was saying earlier, if you get that pullback to that, 218 or whatever, and then the buyers come back again, and it wasn't just this one squeeze phenomenon, that's when I think that you've got a real move on your hands, a real rotation move that's more than just a fly-by-night couple-week squeeze. And that tends to be what my thought process is. I think that's what's going to happen. But we'll assess the technicals as they play out over time.
Okay, all right. So, Derrick, I'll actually throw a question right back out to you then, because it's related to this topic. There's an interesting comment. Crack Until I Die says, don't compare day trading versus longer duration forecasts. So, Derrick, do you think let's call them active traders, are wasting their time even listening to these sort of longer term year-end price targets?
Yeah, sure. It goes back to what David was just saying. I think it's when you get to January or end of December, beginning of January, every single year, and you got CNBC on in the background. I try to never have CNBC on in the background because 95% of it is a waste of time, and I don't even want to hear it. These people who at the beginning of the year give their end of the year prognosis, you have absolutely no idea what can happen over the course of a calendar year. So if you're actually a money manager, you're not just out there making these grand statements on how much up or how much down we're going to be over a long period of time. You're out there trying to figure out the appropriate way to manage your money to make more money over time based on the current circumstance of the market and the highest probability of the next move based on the information that you have in front of you.
Would you say, Derrick, because I told someone about this yesterday, I always say it's really simple. I don't worry about the end of the year. I worry about from today on, where can I garner the most reward versus the least amount of risk? And that's what we do. That's our real job. Not to figure out in 8 months where it is. Over the next 4 to 8 weeks, what has the least amount of risk with the most amount of reward?
That's
or 1 to 3 days.
Yeah, or that, of course.
The time frame that you just said. So I like that time frame.
That's kind of my bread and butter.
That 4 to 8 week time frame of you're kind of incorporating some macro with the technicals, and then from there you begin to break it down into your smaller execution time frames on, okay, I have developed this idea, I've developed this thesis or thought process. Now, how do I actually put that to work? And that's really where I think your technicals come into play. Your big picture charts, your weekly charts, or your fundamentals can tell you what you want to be in, but it's your technicals that tell you how to actually execute that, manage the risk, and manage your game plan to maximize the reward.
Okay, all right. So we just covered time frames. So let's get to what everybody actually likes right now. So we have Netflix on deck on Thursday. Everybody's starting to price in a Fed rate cut. So I want to go around and talk about what everybody actually likes right now. So David, we'll start with you. What are you liking here?
So one thing, it's worked for me since last Thursday. I got aggressively short the Qs, less so now. It is to consistently have several shorts on. I know they probably didn't think that was going to be part of the conversation, but I came in with average cost of a short on Qs on Thursday, 498. I add a lot, 501, and wrote it down. And I keep going back to it via puts or stock for several days because I just anticipate more pressure. Maybe TSM, maybe ASML will change that, but I see more pressure on big cap tech. In terms of what I like what's underneath IWM. So Immunome, a baby of mine. IWM doesn't go without XBI going. Look at the last 7 days in XBI. It said it'd be over 100. Here we are, 101, almost 102, right? But take a look at where where XBI was. Do you guys realize where XBI was several years ago? It was 175. So I think XBI on any continued momentum in the market is 125. And it's not near all-time highs, but still has a 25% move, which then tells me that a stock like Immunome with the 10 million shares short, with one of the most important CEOs ever in biotech, that was just $30 after we bought it at 7. That's finally over the 200 days, probably going to 17 or 20. So I'm a buyer of IWM on pullbacks. Right here, right now, I see as many shorts as I do long. One of the few longs I see that is yet to click and get overbought. Zeta went for me. ENVX went for me. The one that's yet to click, that it's up 25% the past few weeks, but compared to other stocks, that's nothing. Immunome, IMNM.
Okay, so I'll pass over to Scott. What are you liking here?
Well, if JR was on here, he would say, it depends on the morning, depends on the moment, depends on the day. And I have to say that right now myself, because I am also kind of tactical right here, because you have all of these divergences. Like I was shorting Q's premium last week because it was so overbought, and I wound up making good money short the Q's because the Q's didn't make a higher high and started to diverge on Friday. So if you're looking to be long a few things and short a few things, right now the Qs probably need to rebuild the same way the semis on June 20th. So, but today, like, you could have day trades, and not had to be so smart. Like if you go to the chart here at Tesla, let's talk Tesla, because we've all, there's big money trades and then there's tactical trades. So the big money trade, which a lot of people bought and caught here in all of T3 Live land, was when Tesla was right here getting really tight and it looked like it was going to get above 191 and 198. That was when, you had the big money trade. And then kind of like the IWM, people probably got out of, I know I was out of Tesla somewhere into the 230s.
I sold it like a bozo.
That's not a bozo. 190 to 230, 40 points as an active trader. And the options were up 300, 400, 500%. You're like, okay, that's fantastic. I think, though, people started taking the other side of the trade probably right around here, kind of like maybe if we're a little early at the IWMs. And then you had the red dog reversal top right here where it couldn't get above and stay above. And that was your short last Thursday. And since then, it's just been a trade. Like today, in my active account, I made really good money. Everyone knows I'm not a great short, but this morning on the Alpha team, I'm like, guys, Tesla's, was stickier yesterday. I bet you it goes from up 3 to down 3. And if you look here at Tesla, without any position on, because it's rebuilding, Tesla opened up and went from right here. If you would have measured where like just some resistance was, which it bounced back to right into here, it went from up 3 or 4 to down 4 or 5. And I was done with this trade at 10:05.
I did the exact same trade by puts.
I made really good money on that. And then other people have been like, hey, I want to take the other side of the trade. They wound up making, it went from down 5, or when it started to be down 3, they went from down 3 to up 3. They made $6 the other way. So you could be like, either you don't care what Elon's saying, what's going on. You trade the ranges, and it just went right back to where it was. So you could have made 5 to 8 points either which way. But what you had here is different methodologies. So here, you had 252. So here you had a topping tail. So it opened up. You could have shorted, broke, added. Then it held the 8-day, and we all know if it holds the 8-day, it's usually a strong stock that is buyable. Went from here, went back up, and now Tesla could be creating a different type of money trade because it just digested. So, and it's building a little bit of a wedge in here. So it's kind of interesting, right? You would say that it just went to 271, it just consolidated, and now you have, another wedge, which is, digesting what this move has been. And then you got to say, hey, day trading wise, tactically it might be over, because now we got to look at the weekly chart. And if you look what's going on here on the, in the weekly chart, which it's also lagged, it's now building like a bullish type flag here, where, why can't like this? I haven't looked at the weekly chart in a while. This is now done. This is irrelevant. This is irrelevant. Now, this is kind of irrelevant. So now this is your next level of, if you think Tesla's going to, 298. Now it's building another area. This was money trade 1, digestion 2, get tighter, and then you focus on it going into numbers. Gets up, hangs in here, gets above 271. Then it's 299 to actually even higher, like 312. So again, like we said with the IWMs, you start mapping out areas that that are points of references, so you could see where you could be long to and where you should start, figuring out if it's a little harder to be long there, or maybe has prior resistance. So this would be your next zone. So for Tesla, if you map it out, you had your money trade, now you have your tactical digestion. Here's your new void. This is the next target if we can get above this, this 271 area and let the moving averages catch up. So I think mapping things out and doing things like that as an active trader, and also with a swing trade methodology, that's what's going to make you money. And ways that Dave's from the hedge fund world, so he likes ideas. He knows who the CEOs are. He knows what the earnings are. He knows what's going on. So he's able to stay with things with size and have projections and know things more than the average trader. But when you put all that together, that's how you make the big money. But if you trade tactically for a living, we could kind of do that by using the daily chart, the 5 and the 3 and the 15-minute chart, and then you go into the weekly chart, and that's how you put all the time frames together and figure out your sizing.
One thing on what he's talking about, because there are a lot of traders on, I agree with Scott though. Bottom line, when the range gets this wide, it's a blessing. Like, let's take advantage of it. We don't often. I was short Tesla last week. I started a bit earlier. That Friday I got bailed out and killed it. And by the way, that was Thursday. And then Friday morning at 2:33, I'm buying it. And 2:34, 2:35, and by 2:40, I sold it too soon, like I always do. But I was like, this is crazy. I caught the top. I caught the bottom. Let me be it alone. So I'm walking you through this because then today I'm counting the points and going 256, 257. Clearly Tesla put in a top. That I'm sure of till earnings. So now we're bounced 25 points off Friday. Oh, is risk reward good for a cash flow trade to get short? Sure. Bought some puts. They went up like 60, 70%. So I agree with Scott. Just simply put, for traders, we're blessed with this wonderful volatility in a few stocks. Take advantage of it.
Okay, we're going to bounce over to Derrick now. So Derrick, what are you liking here, if anything?
Sure. To pay a compliment to both David and Scott, if I could combine what they both just said, you would have my perfect answer there. I am kind of in agreement with David on these Mag 7 stocks, maybe needing a little bit of a break. And I think that can enable the rotation. But I also am entirely in agreement with Scott about having a tactical approach to this market right now and how you position yourself and knowing what your time frame is as a trader in order to best position yourself. What I'm loving more than anything else right now is just how good the price action got again. Because we had days in June where, sure, we can find stocks that are in play because they got an upgrade or a downgrade, and we can try to day trade them for cash flow. But there were a lot of days in June where we were just flatlined on all three indexes. It was very, very difficult. There wasn't a lot of opportunity out there. And now I'm in a market environment where the traders that I'm working with on the team, this guy's making money on a quick, cute little short, and then in the exact same stock, this lady is coming in and buying it and catching the dip and making money on the other side of the trade. That means that the price action's gotten really good. The opportunity is really out there again, and I'm loving it. I like to take that big picture and then dive down to the small picture to figure out how I want to be in and how I want to position myself. And then I need to surround myself with an understanding of market structure. And that would be the one add-on that I don't think we've spent too much time talking about, is that we are in a very unique environment structurally. I don't remember ever seeing until the last 2 months here an environment where the Qs and the IWM are almost trading perfectly inversely to each other, sometimes literally on a 5-minute chart. If you're watching those two charts next to each other, you will see when the Qs are upticking on a 5-minute chart, a lot of times the IWM is downticking on that same exact 5-minute bar. I've never seen that before. What is creating that? And that's why, by the way, a little bit bigger picture, we were able to all of a sudden get this huge move in the IWM right as we actually got some QQQ weakness, and Nvidia and all these other stocks took a little bit of a break. I think that they're going to continue to take a break as we come into this earnings season, and that can enable the rotation to continue, just because the structure of the S&P right now is it's not able to have these really large moves. Therefore, you have a dispersion trade that's creating these winners and losers. And when it's all the Mag 7 stocks that are going, the other 485 stocks in the S&P or whatever, they can't actually run because the SPY can't lift. The S&P hasn't been able to have up 3% days. It's an upside grind every day because there is forced selling in the S&P into the up move, which therefore means that there has to be rotation under the surface. You realize that individual stock volatility right now is 4x higher than market level volatility. That's also a very unique market situation that we're in right now. I think that traders need to understand that when they're positioning themselves, and it enables a move like the IWM to go much further, much faster. It also goes back to a point that David made earlier. This IWM move is like historic in terms of its speed, and it's not 1% days, it's 3% days. I mean, the Russell here is up another 3.5% today on a day 4. It's really mind-blowing, but it's entirely because of how market structure is. And this move couldn't happen if Nvidia wasn't taking a break right now, because
1,000%.
all the money, it's all pumping into Nvidia. Nvidia takes a break, you can finally get this money to go somewhere else.
Everyone's looking for alpha, all the hedge funds, right? It doesn't matter if it's Tepper, Ackman. I mean, we all know, what was it, Gunlock? Who was it who was so big in IWM?
It wasn't Gunlock. It was
it was the other guy.
It was Tom.
Was it Tom Lee?
Tom Lee said 40%.
No, Tom Lee's not running money. I mean, Tom Lee, called it. Whatever, you guys, come on, someone write in the chat. One of the largest, best hedge fund managers in the world. Anyway, the point is, I think it's a lot of the same funds all chasing alpha. So we know like what's happening. It's not like IWM is not a bunch of retail people. Trust me, there are a ton of hedge funds that just took profits and tons of big cap stocks. Druckenmiller, thank you, brother. So, I mean, it's the same game over and over, and people are chasing alpha. And the question is, how far can these things go? I want to say one quick thing. I'm not against buying, like, I don't look at all, and I know we're going to talk about a Mag 7 the same. So if we get an opportunity, I'll be short Qs and I'll still go long a Mag 7 name. I'm still long Nvidia from the last time it got crushed when it was 117. And if we see a spot like that, again, I'll get long. So I am open to opportunity. I just got to, I got to see opportunity, and I don't see a ton in big cap. Hopefully it'll come. I'd love to see some weakness in Nvidia. Amazon looks like there might be some weakness coming, and I'll get aggressive again.
Okay, all right. I'm gonna call a little audible here because David, interesting. So you said that you might short Qs being long while being long some other tech names. So I've had this question with traders. I've gotten some very strong opinions on this both ways. So I'll start with you, David. Why hedge? Why not just own less of something? Like if the idea of...
I wasn't hedging, so it was a great question.
Okay. Mm-hmm.
But let's go through the details. Prior to the CPI on Thursday, I was like, wow, this is insane. I don't really love Nvidia, but I'm trying to hold some. This is insane. Not in love with Amazon because Jeff is selling me his stock every day, but I'd like to hold some. Amy Noem's going to break out. Zeta keeps going higher, but I want to hold some. I don't love the state of the market. I'm okay putting on a hedge. So if we do pull back, I lose less of my profits. That was pre-CPI. After CPI, I want to make it clear, and I'm going to guess these guys are the same. That was not a hedge. That was an offensive short, and I continue to put those offensive shorts on, not hedges on, buy a Q. I did it yesterday with 495 puts. I made like 40, 50%. Then at the close, we got a quick little bounce. I put them on again. Today took profits. So right now it's less of a hedge. I see offensive opportunity being short big cap tech. Micron broke an important average today. It's one of the first stocks I mentioned on my morning call. I know Kira was shorting it. It was not a hedge. It was an offensive short, right? Micron broke, didn't look very good. So a lot of what I'm doing with the Qs is less about hedging right now. My hedge tomorrow will probably be, believe it or not, shorting the IWM with these guys so I can stay long my calls.
Okay, right, Derrick. So I'll sort of throw the same question to you. So you said you're long a lot of small cap techs, and you're short the IWM against it. Why not just have less shorts on? Because if the positions are working against each other anyway, why even bother with the IWM?
Sure, I love this question because I think it gives something that the listeners can really learn from a trading perspective. So some years ago, throughout my trading journey, it's been a long journey at this point. I've been doing this since '08, since 2010 with T3. I've been with T3 for 14, 15 years now. At some point in my career, I started to get in my head, as I started to swing trade more, the idea of hedging. And it was like, all right, I've got some longs on, so why don't I just short some SPYs or short some Qs? And what I found was that just became kind of a big drag on my P&L because I'm long these stocks for a reason. I've got the idea that these stocks should be moving higher. And then I'm just nervous that I'm making too much money. So I would just short some SPYs and short some Qs, and I would just kind of waste some money doing that. So I abandoned that. And then for a while, I would say, well, I don't hedge. That was my next thing. I don't hedge. I trade to be right. I trade to be wrong. Now, the final third step of my evolution, which is where I am now, is I wouldn't say that I take anything as like a direct hedge anymore. I take trades, but a lot of the times those trades have the impact of also hedging other positions that I have on. And that's what I really like to do. So that's what I'm doing right now with my IWM. My IWM is a trade. It's not a hedge. It's very specifically a trade, but I also understand the impact that it will have on the overall P&L. And I'm also trading different things on different time frames. My IWM trade is meant to be a shorter time frame swing trade. Maybe we'll see what the market actually does and how my game plan works out. But I don't really anticipate to be in this IWM for more than a few days at this point, max. And it's just a trade based on the extension in the market after having such a large move. And if anything, the fact that I've got those other longs on lets me give it a lot looser rope. Because
to clarify, you're talking about your short.
My short in the IWM that I have on right now, it's on as a trade, but I have the benefit of being able to build in, and I'm not worried that I'm down a bunch of P&L in the IWM as of today's close, because I've got all these other longs on that are still more than making up for it. But I also feel that at a certain point, this IWM has to have a pullback. It's almost a law of nature. You can't just extend and extend and extend away from the ADMA forever. You can go for longer than may seem rational. That's how markets work. But at a certain point, you have to have a pullback. And that's where the IWM trade comes in. And I can build back into those other longs that I've also pieced out of on the way up. So they're trades for me, but they have the ability to also hedge the swings of my P&L at the same time and make me money on different time frames.
Can I just add to that for 1 second for him? Because I think I also know what he's trying to say. Like you hear like on TV, everyone's like, oh, I'm a long short fund, or I'm a, for every long you need a short. So Derrick's saying, Derrick was long the small caps for probably 4 of these days. And now he's trying to be cute the way some of us are, saying, hey, we're on day 5 now. This is a trade from here that I could probably make money short the IWM. And then also be able to buy some of my favorite small caps as they rebuild and pull in, because they probably had big moves, and you're staying engaged. Sometimes if you just get out of a name because it's up 4 or 5 days and you're not in it small, you'll never get back into it. So as traders, sometimes you need to have a little on and be wrong in it. So he's trying to say, hey, maybe I'll be a little wrong here, but the IWM little pullback will make me money short, and I'll be able to make more money in the positions that I like as these patterns rebuild. But by no means was he shorting the IWMs at 207 and 210 and saying, hey, I'll be up 18% in these small cap trades and I'll lose 3% in the IWM, but it keeps me in the trade. No, it's at the tail end of a day count rule. We all try and figure out how to make money both ways, and hopefully not start too early, and hopefully have the ability to stay with it, if things get a little sillier, which they might in the next day or so.
That's exactly right. Thanks, Scott.
Okay, all right. Okay, guys, I think that's a good note to end on. We're just about 45 minutes in. You guys want to do one last trivia question before we go?
Not if we're all going to get it wrong.
Okay, all right. Okay, this next one, I think one person will get. In the audience, please participate also. What has a bigger market cap, Nvidia or the entire Russell 2000?
Nvidia.
That's easy. I already told you that 10 times.
What's the answer?
Nvidia is like what, 3 trillion, and you said the Russell's like 600 million.
Yeah,
600 billion.
It's not even close.
Russell 2000 is just a little bit higher. I just looked it up.
It's not true.
Unless my math is.
One's 50, 60 billion, one's trillions. They're not even remotely in the same category.
No, there are. I'm looking at the entire Russell. All right, we will take this up. We will do a formal announcement on Twitter.
What do you know? I'll look it up. The IWM market cap is 63 billion.
Yeah, I'm seeing 63
No, it's
billion
not.
for the IWM. I don't know if that.
No,
if
no,
means
that-
the Russell
that-
2000
that's-
market cap.
I'm not talking about the value of the IWM ETF. I'm talking about all the stocks in the Russell 2000.
Oh, I'm talking
So,
ETF. Gotcha.
You guys are all wrong again.
I'm like, no.
I'm seeing
Everybody's wrong again. Everybody in the audience is wrong again. Nobody. Everybody's a loser today, except for Rick Friedman. He's the only winner we have on the call today. Okay, so
Well,
guys, so
before we leave, I just want to throw out one chart that I think is worth showing out. As a play that's still a play. It's not a hedge. Like, I'm not a metal guy or this and that, but like we had some good trades in gold and silver. This silver to me looks like it's been in this channel since May, and should be able to take out the high of 29.56. If you look what gold did today, gold took off. Gold's at an all-time high. Silver usually lags. So I just think, I'm saying I went out and bought $30 calls today for. I'm also in silver, so all full disclosure for July 31st. So I think if within 2 weeks this takes out 29.56, why can't this thing be 32 or so? So it's just this is something that's not like a massage. It's silver is really not a trade. It's more of an idea, and I think that I think this SLV could be within the next 2 weeks. Those options that I bought today for like 25 cents, could be a triple or more. Right. And we made that as a power play,
let alone a triple. I'm paying attention.
okay, yeah.
Yeah.
SLV made it into power plays today, so people are happy there. So guys, let us know in the chat. Should we do this again? Yes or no? Just type a yes or no. Let us know if you want us to come back again. And tomorrow at 12 p.m., Sammy Abusada and J.R. Romero, we're going to be talking about earnings. And guys, click the link in the video description. We have links to Scott, Derrick, and David's services down in the video description. And we'll be back again soon. Everybody have a wonderful evening.